Hi guys, in this video we'll be doing a trade review of pound yen and our thought, and just to share with you guys our thought process that went behind this trade that we took earlier today with our team in the mentorship group. Right, so we assess the market by starting to look at the daily time frame, and what we immediately saw on the daily time frame was that the market did a liquidity grab of the entire zone, or what you may call a fake out of the market. Right, so that's the first indication to us that the market wants to make a move to the downside to start its corrective course, and would be looking to target ultimately the 139 level. The second indication to us that the market wants to continue to the downside is that we pretty much realize that out of this double bottom pattern, the market simply completed a 5-wave move based on Elliott waves analysis. Market simply pushed here to create the first wave, second, third, a sideways fourth corrective, and finish off with the fifth wave here. So this is another indication that the market is likely to start off with its bigger A wave corrective, followed by a B, then the C, which would ultimately take the market down into these areas. So ideally we would want to see pound back into the pound yen back into the 136 137 region. This is the overall level that we'd be looking at for pound yen. Right, so but for now we were simply focusing on getting the market back to find its key support levels, which is in the 139 level. Right, so from there we took our trade and we pull it down to the 4-hour time frame. From the 4-hour time frame, we also found that the market made another fifth wave move out of these lows. 1, 2, 3, 4, and this was it, finish off with the fifth wave. And this entire move is actually the first wave correction. Right, so what we are looking at now is just A wave corrective, the B, and to finish off with the C somewhere off around here, and then the market should pretty much make its upside move and then continue down. But all this extended play is pure speculation, and we ultimately try to work with price action. So from we saw this information here and we saw the market making another move to the upside, we try to capitalize on the play out of these highs. But to get a better view of this, we wanted to see what the market would look like on the 1-hour time frame, and to see where our ideal entry position would play. So when we pull the market down, when we pull our chart down to the 1-hour time frame, we identified that we should be looking for the market to make its correction back in these highs, and you would be looking at this entire zone. Now when we identified that, now we're saying, okay, if that's the level that we're looking for the market, where would we enter to find minimal risk, maximum reward? To get that, we pretty much pull down to the 15-minute time frame. On the 15-minute time frame, we had a clearer view of everything that was happening out of the market. We realized that the market isn't likely to push to the higher levels here, and I wouldn't go into details about this without getting too much into my strategy. So based on what I can share with you, I can tell you that we anticipated the market to pretty much hit these levels. Right, so what we simply did was to say that if the market should push above this area, then we would be looking for continuations to the highs. So what we did, we anticipated for the market to approach this high. We tried to give ourselves room in the trade, so we pretty much utilized a 20 pip stop loss for this trade, and we wanted to maximize our overall return, so we targeted this area for first take profit. And so this was our bias behind the trade, giving us a 3-to-1 risk to reward. Ultimately, we know that would be targeting the lows down here. But for now, because it was a day trading opportunity. We try to capitalize on what we see immediately. So we set up our pending order in terms of a sell limit order up in these highs, and we allow the market to pretty much play out for us. The market went exactly into the area that we anticipated to hit, put us in the trade, and then we saw the market starting to make its movement down. At this level, we were able to offload a part of our position as well, and from what we saw in this entire area is that the market is likely to make another move to the upside. And if the market makes another move to the upside, we're likely to see the market approach this area. So what we simply did at that stage was to keep offload our position and to reopen another position to capitalize on that move. And we reopen that position in that same area, utilize another 20 pip stop loss, and we tried to target the same lows that we initially identified ourselves with, and we put our stop loss there. At this stage, we would have 2 open trades there, and we allowed the market to run. Market did its thing, placed us in the second trade, and start to move to the downside. We were also able to take profit off the second trade as the market hit this low. So we now had 2 risk-free trade, and we're still looking for the market to continue along its way to the downside. The market corrected, but while we were having a risk-free trade, we still kept our stop loss in the original zone. We did not move our stop loss to break even because we anticipate that the market is likely to make another attempt at this overall area before pushing down. And the reason behind this is simply following the principles of the market to say after every impulse there must be a correction and then another impulse, which would give you a bearish W formation. Out of that, we generally anticipate for the market to hit back the neckline. So that is one of the reasons why we did not move our stop loss for this trade. Now let's just roll on through to current price action now, just to get an indication as to where price is as we speak. And this is where we are right now in terms of price action. So the market is still pushing down, approaching back that same target area. Ultimately, we're looking for the market to finish off its way here, another correction, and we try to identify a new entry. Alright, so this is pretty much how we go through identifying entries and exit points out of our trades or for our trades on a daily basis. If you realize that we try to ensure that we get minimal drawdown periods for our trades. We hate to see our trades start to go in large drawdowns. So we try to minimize our risk, maximize our return. If you like our analysis and like the way how we look at the market and how we trade, you can easily sign up for one of our mentorship course, whether it's one-on-one mentorship or group mentorship. We analyze the market daily, we identify trades, we share our thought process behind every trade that we take. We show you how to improve your overall analysis so you can find these setups, find these trades for yourself, and ultimately improve and become better analyst. And that is what we aim for. Alright, so again, thank you, and thank you again for your time and for watching this video, and we will keep you updated as this trade progresses.